Welcome to the Printing Bureau, where we unlock market secrets through cutting-edge predictive analysis and forecasts. Dive deep with us as we explore stocks, commodities, crypto, forex, and property. Remember, while we provide insights, this information is for educational purposes only and should not be considered financial advice. Market predictions are inherently uncertain, so always do your own research and consult with a financial advisor. We're not liable for any losses or damages. Let's navigate the markets together.
All right, guys, welcome to the weekly review with James and Kenny here. The first pair we're looking at is the Dixie. This is the weekly chart on the Dixie. This is a rejection candle. As you can see, we've got a rejection candle here. We had a pink candle that got exceeded, and there's another one on the 4-hour chart, which I'll bring up again. But this looks good on a weekly chart. This is a rejection candle. Maybe we might come back a little bit into it. And if we get back to about, say, 50%, I think then we can hopefully go into this box, which is around we test the basis of here around the 97.1 zone. And I think, we could even go back and test the Bollinger Band number, which is sitting around the 97.6. If we get lucky, then we might go to about 98. But after that, I'd expect us to come back down again. That's the view on Dixie. Let me just quickly slip to the 4-hour chart and have a look. So yeah, this is definitely a reversal candle. It's an inverted hammer, it's a reversal candle. And we've come back into it, and I think we probably end up going up. So those are the options that I'm looking for. If I go onto the monthly chart, you see we forming a very bullish setup here. But I don't think this is done. I think once we bounce up, I think that we could potentially come all the way down to 91, 92, or even to this zone here, which is around here, 89. But that's obviously a few months, maybe a few weeks before even anything like that happens. So that's what I've got on the Dixie, and I'm going to pass it over to James to share his thoughts as well.
So our megaphone pattern has been invalidated. It looks like we came up and tested it and were rejected. So as it sits right now, I think we are going to probably go a little lower and maybe kind of consolidate this low near the 93 range. I'm really seeing no strength at all in this, especially because that bottom line has been invalidated. I don't think we're going to spend any time in this yellow box anymore. I think a new formation will be printed kind of down in this region here. So I'm looking for us to come down here and probably maintain these prices until December of this year as we kind of consolidate this big move that just happened. Usually these things are a 1-to-1 ratio. So if however long of time we take this way in the move down is the amount of time that we'll take to consolidate. That's a good rule of thumb with these types of things. So that's all I got for Dixie.
All right, guys, our next pair is the Nasdaq. So if you look at the Nasdaq on a weekly chart, which you can see, my only concern on the Nasdaq is volume. So you can see volume is coming down, but we're going up. And going up one week and going up higher the following week on lower volume doesn't show strength. It's possible that, we maybe come back and test the tops of these Bollinger Bands and also here, which is around the 22,164, or even we get a Bollinger Band, which is 22,066 as a pullback, and then we'll see the reaction, I guess. When we get there, do we get support? If we get support on these zones, then obviously we continue going up. With all these sort of moves outside I guess the Bollinger Band, when it sort of comes back in, you tend to come back into the 9. So the 9 will move up a little bit, and then they'll kind of meet somewhere, and that becomes like a support zone, and then it goes up again first before, if there's even going to be a collapse, there is a collapse. So I think there's a small pullback. If we step into the 4 hours, you can see that that scenario is already playing out. So we have a divergence between this spot and this spot here. And you can see, strong volume, but we don't actually go any further. We come back into the KC channel, back into the Bollinger Band. And this area, here on the 9 and the 20 is a yellow. Sometimes could be support. It could be support. But, you know, I think, we potentially may end up probably coming down into the, slightly lower than that. So that's what I'm looking for anyway, because of the divergences we've got playing out, and also the weakness in the MACD, and the selling volume is also picked up as well. So maybe a bit more pullback, as I kind of explained on the weekly chart. We kind of pull back a bit more to these tops here and see how it goes. So I think I'll just extend my interest box a little bit, and I think we will come a bit more down. So somewhere there would be where I'd expect us to come back to. Last week, this box was filled. We kind of drew this box last week, so I can delete that box. It's done its job. So that's all I've got on the Nasdaq. Pull back and then potentially continue going up. I don't think it's done yet. Pull back, continue going up will be what I'll say. I'll pass it back to James to share his thoughts as well. Play.
Yep, so we're kind of keeping the same idea as a couple weeks now of we're in this number one cycle, this number one thrust up, this first leg into this year-long bull market that will last until August. And to put our Bollinger Band on, we could see we're still grinding this upper band up. And when something like this happens, we can assume with a pretty high chance of probability that we are going to grind it up. And we're going to be at this range until the $25,000 level, in which I'll be interested. This is not financial advice, but I would be interested in taking a short up here at these levels at 25,000 and then riding them back down to 23,250 just to be safe, these levels here. And then from there, I would be looking for a long to ride back up on the second wave to 28,000. So continuing to grind this upper Bollinger up, and I will see you all at 25,000, and it's suspected to be end of August. So end of August, 25,000 is what we're aiming for, and that's what we're holding on to. So this is all I got for NASDAQ.
All right, guys. The next one we've got is the SPX. SPX is very similar to the Nasdaq, to be honest. It's in a strong territory. We're above the Bollinger Band. Just the only thing I've got is just volume is declining a little bit. So, I wouldn't be surprised if we have this box was last week. We've achieved that, so I think I'll move it anyway. I think this week I will put my box somewhere here and put it somewhere there. So, because the volume, we've gone higher on lower volume, and this was the main candle really. So I'd expect us to test some portion of this candle before we continue going up. Very, very similar to most of these big fat candles when they go outside like this one here. When you go outside the Bollinger Band, you tend to come back into some of the candles before you continue going up. So if you step it back to say 4 hours, I think you might get the flavor of what is coming. So you can see here we've started to kind of cool off, and I think we'll cool off into this box. So it doesn't mean that the move is finished. It's just a small pullback. Probably best to use it to kind of maybe buy some more long positions, depending on the reaction we get at these points. If we ever get to this low point here, see the reaction we get, and then use that to go for a long rather than shorten it from here to here, which is a very small short. It's really not worth your while. So let that play out and then join the long to go to the next leg to the upside would be what I would say. Okay, I'm going to pass it back to James to share his thoughts as well.
So same idea as NASDAQ, but something I want to point out, we took the low to the high to the low as an extension. And what you're going to see a lot of times with coming off of a bottom, especially into new all-time highs. So I'll say that again. Coming off of a bottom into new all-time highs, what you'll see is a consolidation around the one range, which is this level here, this blue line. This is our consolidation at the one range, and now we have our breakout. So as we're breaking out, we're looking for the 1618, the 212, and all the way up to 7,000. This is going to be a slow melt up as Nasdaq will be. I'm more bullish on S&P than Nasdaq, so I'll leave you with that. So this is all I got for S&P.
All right, so gold it's done a pullback to the 9 and it's trying to go back up. Um, this volume is still, this candle is still controlling the market until this candle is overtaking and the volume on it is quite big. So we didn't overpower it in any way, shape, or form. If I take you to the daily chart, so we had a bit of a divergence here, and we've managed to go 3 days in a row, and we've had a pullback. Um, I think for me, I think gold will pull back because the way I kind of trade, I look for three clear drops, and if I say this is one and this is two, where's my third drop? I don't have my third drop, so I expect this to come below this price, this 3120, and the moving averages are quite close anyway. So, I expect this to fall into this box somehow, to form the third level drop, and at this point here, I get interested in a long position on gold. But as it is now, it's a short for me. So that's all I've got, and I'm going to pass it back to James.
Yeah, so to pick up where we left off, which was last week, probably around here, with this J pattern, things are really playing out how we expect. I wouldn't be too, you know, I wouldn't be too much of in a rush to jump in right here. You'll probably get 3250 again, maybe even 32 uh 3250. Yeah, well, let's say 3300. You might get 3300 again, but I think we're gonna hit a consolidation at this level here, and then we're just gonna continue off into gold's bull market. I don't really suspect anything down here unless there is some type of black swan event. I think we will consolidate down here at this 3300 level until about mid-July. So probably do a week and a half, 2 weeks at this level before we take off again. And I would be, this isn't financial advice, but I would be buying these levels up and I would be very happy with them. That's all I got for gold.
Okay. All right, guys. So our next pair is Bitcoin, and as you can see, Bitcoin, we kind of closed. Well, I mean, this is the CME chart, so they're closed, and you can see they closed red throughout, which suggests to me that there might be a fake out to the upside before we come down. So we could have a fake out to the upside, maybe here, 109, maybe 109, somewhere there, and then bring it back down. Um, I I'm skeptical of their levels because if this whole move is one drop, this is another drop, I'd expect another drop, just the way it is. So it takes a while. If you come and look at, how these things play out and you just compare it here, you had a drop there, then you had another drop, then you had another drop before you went up properly, right? Now somebody will say, from here to this point here, the yellow line is one drop, and then this is another one, this is that one, another one. That's also possible, you know what I mean? But the way I trade, I think there will be another drop to the downside, into I think the 97 zone, somewhere here, 97. And also there's a gap here that they need to close as well. So it kind of ties up with a gap that needs to be closed. And there's even another gap down here at 91. So, you know, it's all possible that, you know, we run it up into Monday, Tuesday, and then we kind of run it back down, would be the expectation on this chart. Um, so let's move that. And we didn't get into our interest box for the rise. Um, so let's see what happens with the interest box for the low. I'm going to leave that one there. And then let's move on to the Binance perpetual chart and have a look at that one too, see what's going on there. So you can see on the weekly chart, let's even use the daily chart. You can see, I think that's what I was describing on the CME chart is what is happening. So you can see that you had a red candle, big red candle, which has to be exceeded, but then we go the other way first. So this is what's happening. And I think we got to 109, 109.079. So, you know, I won't be surprised if, you know, Monday into Tuesday, we kind of end up collapsing back down, you know, to kind of see if we can test this 106 zone. And if we can find support there, if we can't, then of course, you know, we come in obviously to, you know, to test some, you know, there's some liquidity sitting between here and here, between 99.6 and 98. So I won't be surprised if we go to 97 and that becomes the end of the fall. And then we can actually then start going up because I still count this as level one drop, level two drop. So I need a level three on this daily chart and I don't have it at the moment currently. So just a bit of caution. Of course, it's invalidated if you break above it and we close above the Bollinger properly and the KC channel properly, then yes, you know, that invalidates that whole scenario. But as it stands now, it's a bit suspicious for me. So that's all I've got on Bitcoin. I'm going to pass back to James to share his thoughts.
So the pattern I'm going to be talking about today is the unresolved candle bodies due to the abnormal threshold break. So the first one we were talking about over the past couple weeks. So the formation happened again. So just to clear up what we're talking about, this candle here, where this blue vertical line is, it broke the threshold. The candle that did it is up here. So we put a blue box around, and our theory is price has to return to that candle price and resolve those orders. Me and Kenny were watching it live about 2 weeks ago. We're in the process of studying that and formulating that into um, a bite-sized theory for you guys. So we have our blue box. So we just had another formation occur. This time it's on the 30-minute. So let's go into the 30-minute and we see which candles did it right here. That's what our vertical blue line is. So we put our blue horizontal box around it and now we wait. So just to kind of play into it a little more, just because of the recency of this move and how and the similarities we're seeing in this move, we're going to take the bar pattern and overlay it onto the current price. Now, you don't want to drive yourself mad with the patterns and, take this stuff with a grain of salt, but when you overlay it to scale, it kind of shows us dipping back into the blue box around let's switch the date around late August of this year. So I'm expecting us to have a run up to about 115,000 as we repeat this volume pattern. This volume pattern is just price consolidating, price working itself out, price getting ready to make that move higher if it does, or it's getting ready to make that move lower. Regardless, these are organic moves that Bitcoin makes to resolve itself, to find out where it wants to go. Because when it comes down to this level, if it doesn't just dip $500 below like it did over here, maybe less, maybe it was 300. If it starts dipping $1,000 below our blue box and keeps going, we know, hey, price is not happy with the orders that were still on the book at this level, and we need to look for lower prices and lower volume signatures, which are at 90,000. So we have a plan for everything, and these markers really help us to determine where Bitcoin is going to go. So I expect 115,000 um in about a week here. So not financial advice, but up here, if we can't break past this 2618, I would be looking for price to turn down. Another area of interest is the 120,000 level. Things are going to get crazy. Things are going to get greedy at that level. Just want to let you guys know, I don't really see us going past like 121. My personal target is 116. So do with that what you will, and I'll see you guys next week.